Across the country, California could also get hit hard by the proposed tax plan, given the high cost of housing.
Part of the problem is lawmakers, state and local, help create the problem by enforcing these anti-growth policies. Today, home prices are twice the national average, and 70% of people can't afford to buy a home.
Well, we all know that it's hard to make it in the Bay. The housing shortage in California is pushing many out.
California's housing market is sending out warning signs. Once thriving neighborhoods are now facing unprecedented challenges. Why? The numbers don't lie. Some cities are on the brink of a major price crash. Is your city on the list? Will home prices plummet in the places you're considering? The Golden State's real estate landscape is shifting rapidly. Let's take a hard look at the top 10 cities in California where home prices might crash in 2025. What's driving this trend, and what can you do to stay ahead? Number 10. Ukiah. Ukiah, nestled in Mendocino County, is known for its vineyards and small-town charm. But in 2025, the housing market here is showing signs of strain. The median listing price in Ukiah has dropped to $579,500, reflecting a 3.3% year-over-year decline. This might not seem like a massive drop, but for a small market like Ukiah, it's a significant indicator of cooling demand. Homes are also sitting on the market longer, with average days on market creeping up compared to previous years. One of the key issues in Ukiah is its limited economic diversity. The local economy relies heavily on agriculture and small businesses, which are vulnerable to economic downturns. With rising interest rates and inflation, many potential buyers are finding it harder to secure financing, leading to fewer transactions. This has created a buyer's market, where sellers are forced to lower their prices to attract interest. Another factor is the lack of new development. While this might seem like a positive for maintaining property values, it actually limits the market's ability to attract new residents. Without fresh inventory, the market becomes stagnant, and existing homes lose their appeal. Add to this the rising cost of insurance due to wildfire risks, and it's clear why Ukiah's housing market is struggling in 2025. Number 9. Eureka. Eureka, located on California's northern coast, is a city with a rich history and stunning natural beauty. However, its housing market in 2025 is facing some serious headwinds. The average home value in Eureka has dropped by 4.5% over the past year, bringing the median price to $423,847. This decline is partly due to the city's economic struggles, as it relies heavily on industries like fishing and timber, which have been in decline for years. One of the biggest challenges in Eureka is its aging housing stock. Many of the homes here are older and require significant renovations, which can be a deterrent for buyers. Additionally, the city's remote location makes it less attractive to young professionals and families who are looking for job opportunities and amenities. This has led to a shrinking pool of potential buyers, further driving down prices. Environmental factors also play a role. Eureka is prone to flooding, and with climate change increasing the frequency and severity of storms, many buyers are hesitant to invest in a market with such high risks. The cost of flood insurance is another barrier, adding to the overall expense of homeownership in the area. Number 8. Clear Lake. Clear Lake, located in Lake County, is a city that has long struggled with economic and social challenges. In 2025, its housing market is no exception. The median home price in Clear Lake has dropped significantly, with some estimates showing a year-over-year decline of over 5%. This is a stark contrast to the rapid price increases seen in other parts of California during the pandemic. One of the main issues in Clear Lake is its high poverty rate. With limited job opportunities and a struggling local economy, many residents are unable to afford homeownership. This has led to a high number of foreclosures and distressed properties, which drag down overall market values. Additionally, the city's reputation for crime and blight makes it less attractive to potential buyers, further exacerbating the problem. Another factor is the city's vulnerability to wildfires. Lake County has been hit hard by fires in recent years, and the rising cost of insurance is making it even harder for residents to afford their homes. This has created a vicious cycle, where declining property values lead to less investment in the community, which in turn drives prices down even further. Number 7. Chico. Chico, located in Butte County, is a city that has seen its fair share of ups and downs. In 2025, its housing market is facing significant challenges, with home prices showing signs of a potential crash. The median home price in Chico has been fluctuating, but recent data suggests a downward trend, with some areas seeing declines of up to 3% year over year. One of the key issues in Chico is the aftermath of the Camp Fire in 2018, which devastated nearby Paradise and led to an influx of residents seeking housing in Chico. While this initially drove up prices, the market has since cooled as the city struggles to accommodate its growing population. Infrastructure and public services are stretched thin, making it harder for the city to attract new residents. Another challenge is the rising cost of living. With inflation and high interest rates, many potential buyers are finding it difficult to afford homes in Chico. This has led to a slowdown in sales, with homes sitting on the market longer and sellers being forced to lower their prices. Additionally, the city's reliance on California State University, Chico, means that the market is heavily influenced by the student population, which can be unpredictable. Number 6. San Francisco. San Francisco, the city of fog, tech, and sky-high real estate, is seeing some interesting shifts in 2025. The average home value here is $1,291,622, which is down 0.4% from last year. Now, that might not sound like a crash, but in a city where every square foot feels like gold, even a small dip can ripple through the market. The median sale price is hovering around $1,421,000, and homes are taking about 17 days to go pending. That's a bit slower than the lightning-fast pace we've seen in the past. What's driving this? For starters, the tech exodus. With remote work becoming the norm, many tech workers have traded their cramped city apartments for more spacious homes in the suburbs or even out of state. Add to that the rising cost of living, and you've got a recipe for a cooling market. And let's not forget the new construction projects that are finally hitting the market, adding more inventory and giving buyers a bit more breathing room. But it's not just about the numbers. San Francisco's unique geography plays a role too. The city is packed into just 49 square miles, with hills, water, and strict zoning laws limiting where new homes can be built. This scarcity has always driven prices up, but as demand softens, we're starting to see cracks in the foundation. Neighborhoods like Hayes Valley and the Mission are still holding strong, but others, like the Sunset District, are feeling the pinch. And then there's the rental market. The average rent in San Francisco is $3,647, which is a whopping 7.8% higher than last year. For many would-be buyers, renting is starting to look like the better option, especially with mortgage rates climbing. It's a tough time to be a homeowner in the city, but for renters and buyers, there might finally be a glimmer of hope. Number 5. Santa Rosa. Now, let's head north to Santa Rosa, the heart of Sonoma County. This city has always been a bit of a hidden gem, offering a mix of wine country charm and suburban convenience. But in 2025, the housing market here is facing some turbulence. The median home price is $749,000, up 2.3% from last year. But don't let that fool you. The market is showing signs of strain, with inventory levels rising and homes taking longer to sell. One big factor is the shift in buyer preferences. During the pandemic, Santa Rosa saw a surge in demand as people fled the cities for more space and a slower pace of life. But now, with remote work policies tightening and the cost of living rising, some of those buyers are rethinking their choices. The result? A market that's starting to cool off, especially in higher-end neighborhoods. Another issue is the wildfires. Santa Rosa has been hit hard in recent years, and the lingering fear of future fires is making some buyers hesitant. Insurance costs are also on the rise, adding another layer of complexity to the market. And let's not forget the impact of climate change, which is making the region's already dry summers even hotter and drier. But it's not all doom and gloom. Santa Rosa still has a lot to offer, from its vibrant downtown to its world-class wineries. And for buyers who are willing to take the plunge, there are deals to be had, especially in neighborhoods like Bennett Valley and Rincon Valley. It's a market in transition, and the next few years will be critical in determining its trajectory. Number 4. San Jose. Next, we head to San Jose, the capital of Silicon Valley. This city has long been a poster child for California's housing crisis, with sky-high prices and fierce competition. But in 2025, the market is starting to show signs of fatigue. The average home value here is still over $1 million, but growth has slowed, and some neighborhoods are even seeing slight declines. One of the biggest factors is the tech industry. San Jose is home to some of the world's largest tech companies, and their fortunes are closely tied to the housing market. With layoffs and hiring freezes becoming more common, the demand for housing is starting to wane. And as more tech workers opt for remote work or move to more affordable areas, the pressure on the market is easing. Another issue is affordability. San Jose has always been expensive, but with mortgage rates climbing and wages stagnating, many buyers are finding it harder to make the numbers work. This is especially true for first-time buyers, who are being priced out of the market altogether. And for those who do manage to buy, the high cost of living leaves little room for anything else. But it's not just about the economy. San Jose's geography also plays a role. The city is surrounded by mountains, which limit where new homes can be built. And with strict zoning laws and a lack of available land, the supply of housing is unlikely to increase anytime soon. It's a classic case of supply and demand, and right now, the balance is starting to shift. Number 3. Napa. Napa, the heart of California's wine country, is seeing some turbulence in its housing market in 2025. The median home price here is $875,000, down 1.5% from last year. While that might not sound like a dramatic drop, it's significant for a region where real estate has long been a prized asset. Homes are taking an average of 34 days to sell, slightly longer than last year, and about 25% of homes on the market have seen price drops. This cooling trend is a stark contrast to the pandemic years when Napa's market was red hot, fueled by buyers seeking more space and a slower pace of life. One of the biggest challenges Napa faces is its susceptibility to natural disasters. Nearly 99% of properties in the area are at risk of wildfires, and 39% are at risk of severe flooding over the next 30 years. These risks are not just theoretical. They've already impacted insurance costs and buyer confidence. Add to that the rising temperatures. Napa is expected to see a 100% increase in days over 95 degrees Fahrenheit in the next 3 decades. And you've got a recipe for a market that's losing some of its luster. Climate change is no longer a distant concern. It's a present reality shaping the housing market. Another factor is the shift in buyer demographics. While Napa has always attracted retirees and second home buyers, the younger generation is less inclined to invest in a market with such high entry costs and environmental risks. The median price per square foot is $571, down 3.3% from last year, but still steep compared to other regions. This has led to a growing number of homes sitting on the market longer, giving buyers more leverage to negotiate. Despite these challenges, Napa's charm remains undeniable. The vineyards, the culinary scene, and the overall lifestyle continue to draw people in. However, the market is clearly in a transitional phase. Sellers who price their homes competitively and address potential risks up front are more likely to succeed. For buyers, this could be an opportunity to enter a market that's finally showing signs of softening. Number 2. Truckee. Truckee, nestled in the Sierra Nevada mountains, is another city where the housing market is cooling off. The median home price here is $1.1 million, down 8.9% from last year. Homes are selling faster than before, with an average of 40 days on the market compared to 63 days last year. However, the number of homes sold has increased by 23.5%, indicating that while prices are dropping, activity is picking up. This is a classic sign of a market adjusting to new realities, with buyers gaining more negotiating power. One of the key factors driving this shift is the increase in inventory. By mid-2025, Truckee had its highest level of active residential listings since 2018, with a 30% increase in inventory from earlier in the year. This has given buyers more options and reduced the competitive frenzy that once defined this market. The sale-to-list price ratio has also dropped to 97.7%, meaning homes are selling below their asking prices more often than not. For a market that was once dominated by bidding wars, this is a significant change. Truckee's geography and lifestyle have always been its biggest draws. The proximity to Lake Tahoe, world-class ski resorts, and endless outdoor activities make it a dream destination for many. However, these same features come with challenges. Nearly 99% of properties in Truckee are at risk of wildfires, and 15% face severe flooding risks. These environmental factors, coupled with the high cost of living, 55% above the national average, are making some buyers think twice. The condo market in Truckee is also worth noting. While single-family homes dominate the landscape, condos have been selling quickly, often within 11 to 20 days. The median condo price is holding steady at around $950,000 to $1 million. This segment of the market is particularly popular among second-home buyers and investors looking for rental income. Overall, Truckee's market is shifting toward a more balanced state, offering opportunities for both buyers and sellers who are willing to adapt. Number 1. Vallejo. Vallejo, located in Solano County, is experiencing its own set of challenges in 2025. The median home price here is $538,000, making it one of the more affordable markets in the Bay Area. However, affordability doesn't necessarily mean stability. Prices have been trending downward, and the market is showing signs of strain. Homes in Vallejo are taking longer to sell, and the number of price reductions is on the rise, indicating that sellers are struggling to meet buyer expectations. One of the key issues in Vallejo is its economic landscape. While the city has made strides in recent years, it still faces challenges like high unemployment rates and a lack of high-paying jobs. This economic instability has a direct impact on the housing market, as fewer residents can afford to buy homes, even at lower price points. The median price per square foot is $358, which is relatively low compared to neighboring cities, but still a stretch for many local buyers. Vallejo's location is both a blessing and a curse. It's close enough to San Francisco to attract commuters, but far enough away to feel disconnected from the Bay Area's economic engine. This has made it a popular choice for first-time buyers and those looking for more space, but it also means the market is heavily influenced by broader economic trends. When the Bay Area sneezes, Vallejo catches a cold, so to speak. Despite these challenges, Vallejo has its bright spots. The city's waterfront, historic downtown, and diverse community make it an attractive place to live. However, the housing market is clearly in a state of flux. For buyers, this could be an opportunity to get into a market that's more accessible than most in the region. For sellers, it's a reminder that pricing and presentation are more critical than ever. CTA, if you enjoyed this video, let us know in the comment section down below and turn on your notifications to know when next we upload. See you in our next video. Bye.